Hey there, awesome accounting student. Mark Franke here. This video is for Accounting 100, and this is Chapter 8 on purchasing transactions, where we will also deal with accounts payable, and because accounts payable is where we keep track of vendors that we buy stuff from. And most of what we're buying today is going to be merchandise. Merchandise means stuff we're going to resell. As we make these entries into our general ledger, we will also keep track of each vendor in an accounts payable ledger. This particular problem is 8.4b and 8.5b. These are in your book on page 273. So as we record these transactions in the general ledger, anything that goes to accounts payable also needs to be posted into the accounts payable ledger. Let's get started. The first transaction says, issued check 101 to purchase merchandise for $2,500. There is no accounts payable involved here. We just bought some merchandise. Debit purchases and credit cash, $2,500. This is transaction A, and $2,500 in cash. Transaction B says we bought $2,200 of merchandise from Brown Dental Corp on invoice 866, terms 110, net 30. I have put the terms of this transaction in the description so that the reader or somebody in the future will know what those terms were. Debit purchases and credit accounts payable. So we'll post this to our ledger. Debit purchases, $2,200. And this is transaction B. And credit to accounts payable, transaction B. And because this went into the accounts payable account, we need to also post to the accounts payable ledger for Brown Dental Corp. Anytime we put something in accounts payable, we have to also put it into the accounts payable ledger. On the 5th of August, this is transaction C. We bought some merchandise from Dental Concepts. We bought $3,900 worth of merchandise, and we had some freight. So we're going to put the freight into a separate account called Freight In. It's also an expense account, just like purchases, and credit accounts payable for $4,000. So we debit purchases for $3,900. This is transaction C. We're going to debit Freight In for $100, and we'll credit accounts payable $4,000, and we have to also post it to Dental Concepts on the credit side. If it's a credit in accounts payable, it's a credit down below. If it's a debit in accounts payable, it's a debit down below. Transaction D, we made a payment. In this case, we took a discount of 1%. Our terms on that original invoice for Brown Company was 110 net 30. So we took a 1% discount. Our merchandise was $2,200. 1% of that is $22. We're sending them a check for $21.78. So we will debit accounts payable to get rid of it, $2,200. We're going to credit cash for $21.78, and we're going to credit purchase discounts for the $22 that we took. And we will also put that debit into Brown Dental Corp accounts payable ledger because we wiped it out. Now, important thing to remember is we have to take the accounts payable out at what we put it in. We put it in at $2,200. Even though we took a discount and paid less, that invoice has to come out of accounts payable at $2,200, or the gross amount. Transaction E, we had a return to Dental Concepts for some sort of defective product. that we received. So they issued us a credit memo. And so we'll post that $300 debit accounts payable for $300 and a credit to purchase returns. Purchase returns is a negative expense account. Purchases discounts is a negative expense account or a contra expense account. And we have just reduced Dental Concepts by $300, so we need to post that down to the subsidiary ledger or the accounts payable ledger for Dental Concepts. Transaction F, we bought more from Brown Dental Corp, $1,700. Debit. Purchases, $1,700. And credit accounts payable, $1,700. This is transaction F, and we need to post that $1,700 to Brown Dental Corp's accounts payable ledger. Anytime we put something in accounts payable, we have to also put it into the accounts payable ledger. Transaction G, we made a payment to Dental Concepts. Now remember, we sent some product back, so we had a return of $300. We also had some freight in this one, but we can't take the discount on the freight. So we take the invoice amount, which is $3,900, subtract the merchandise return. That's $3,600 net purchase. 2% of that is $72. We have to add the freight. We're sending them a check for $36.28. Debit accounts payable, $3,700 to get that out of accounts payable. Credit purchase discounts for $72, and credit cash, $36.28. So debit accounts payable, $3,700. Credit cash, well, let's go ahead and, credit cash for $36.28. Check that out, make sure that that's what it was. $36.28 sounds right. It is. And we had a $72 discount. So we'll credit purchase discounts for $72. This is transaction G, actually. And we have to post this down to Dental Concepts. We've paid them off. And you'll see they had a $4,000 credit on their account. They had a $300 debit on their account. Now the $3,700 debit here is going to wipe out their balance, which is what we want. Then transaction H, we bought some more. We bought some stuff. This is a trade discount. A trade discount. The way this works, and in this case we have a tier 1 and a tier 2. This is a way that companies can save money on their catalogs. So they have a list price, and then to different customers, depending on how much volume they do and the relationship with the customer, they might give a tier 1 discount, a tier 2 discount, and in some cases there might be a tier 3 discount. So in this case we had a 2-tiered discount, 20%, and then 10%. So we take 20% of the $4,000 list price, subtract that to get $3,200 remaining, multiply that times 10%, and that's $320. So our invoice price is $28.80. Debit purchases, credit accounts payable. This is surgical supplies. So $28.80 debit purchases. And credit $28.80 to accounts payable. And then down below for surgical supplies, we have to post that $28.80 to their account. This is transaction H. Transaction I. We bought some merchandise and we paid cash. So no accounts payable, just debit purchases $1,900 and credit cash $1,900. So we'll do that. That's transaction I, but there's no accounts payable effect, so we don't have to worry about the accounts payable ledger. Transaction J, we sent some of that merchandise back. It was defective. So what we just purchased on check 104, we are sending $175 of it back. So debit cash, we're getting the cash. Cash is going up, and credit purchase returns, 175. Debit cash, 175. This is transaction J. And we'll put in purchase returns of 175. Transaction J. Again, no effect on accounts payable, so we don't have to worry about posting anything to the accounts payable ledger. Then our last transaction was a purchase from Dental Concepts for $21.25. $21.25. We had freight of $7,500 and accounts payable of $2,200. So we're going to put the freight in the freight in account, and accounts payable is $2,200. Debit freight. This is transaction K. Debit freight for $75. Debit purchases for $21.25, and credit accounts payable $2,200. Transaction K. So we're going to post that to the ledger for Dental Concepts. And now we can balance out the accounts payable account, balance out the ledger accounts, and then prepare a schedule of accounts payable. I'm going to pause the video. You can do the same thing. Just go ahead and click pause. Prepare these reports. Just balance out the accounts payable account, balance out the ledger, and then prepare the report for schedule of accounts payable, and then compare it to what I get. I'll be right back. Okay, I'm back. Balanced out the accounts payable account. I balanced out the accounts payable ledger. I'm not worrying about the other accounts because we don't really have everything for this. This is just focused on these 6 accounts. But anyway, the point is, my accounts payable account agrees with my schedule of accounts payable. So this is a really good control process for making sure that errors don't happen. So our accounts payable ledger, we have Brown at $1,700, Dental Concepts at $2,200, Surgical Supplies at $2,880, and they agree with the balance in the accounts payable account. Works just the same as what we did in Chapter 7 for sales, but now we're on the other side of the ledger using the accounts payable and purchasing and making payments. So thanks for listening. Practice this, and I'll see you again soon.